Where is the market heading next? That's a question every trader will find themselves asking, and now that you should be equipped with the basics of Forex trading, we'll attempt to answer it by exploring the indicators most often used in technical analysis. These indicators can be broadly categorized as follows: trend indicators, momentum indicators, and volatility indicators. We'll start with a brief overview of what each category means, then we'll explore the indicators in detail in later videos. Trend indicators are useful in determining whether a trend is present or if the markets are just moving sideways with no clear direction. There's a saying that the trend is your friend, so we want to be sure to get on the right side of the trend when we're trading. The most common trend indicators are moving averages, Ichimoku cloud, and average directional index. As the name suggests, trend indicators only work well in the presence of a trend. This means there must be a clear direction that prices are moving towards, either to the upside or downside. To determine if a trend is present, we can do so by looking at the highs and lows. When prices consistently form higher highs and higher lows, we consider it an uptrend. Conversely, if prices consistently form lower highs and lower lows, we can consider it to be a downtrend. Momentum indicators measure the strength of the movement in prices and are useful in identifying key reversal points. When the indicator reaches extreme levels, it could signal a potential change in trend. On top of that, divergence is another widely used concept in momentum indicators. We will explore this in more depth in the future videos. Here are the most widely used momentum indicators: stochastic oscillator, relative strength index, and moving average convergence divergence. Volatility indicators help us to anticipate the range of movement in prices and are useful for placing our stop losses. When a currency pair swings wildly up and down, it has a high volatility. Meanwhile, a currency that does not fluctuate as much has a low volatility. The most common volatility indicators are Bollinger Bands, average true range, and parabolic stop and reverse. Each of these in detail in our upcoming videos. Make sure to subscribe and hit the notification bell so you never miss an update.